I think that's very topical, actually. And you painted a fantastic picture there. It's very topical at the moment because I think if I look back to the mining conference in Melbourne and even recently in London last month, you had a lot of protesters, and it's absolutely their right to protest, no problem with that, about some of the behaviour from some of the mining companies. They are concerned, but what you're doing, I guess, would possibly address some of their concerns, and the fact this recycling is a good thing to do for all the reasons you lay out. So yeah, very, very, very topical. But look, you've painted a picture of the scale of this globally. For your investors,
Well, no, that was just in Europe.
well, sorry. Okay,
That's just in Europe. Like, I mean,
that's just Europe. But the process is the same the world over. But can you
correct.
help me understand and your shareholders and any potential shareholders, what's the opportunity of the scale here for you? SGS is a $5 billion group, operates in 95 countries around the world. Great partner in terms of being able to help you put this thing together, your plan together.
Yeah.
Financial contribution, but more importantly is the feedstock and distribution of this. Can you give us an idea of what you think you're building?
Like, if we go back to May when we put out the Class 5 study results, and this is for the starter plant. So once you attach to a cell maker or a car maker, it's got a modest sort of capital cost around 66 million US dollars. We'd be 50-50 with the Germans, and the Germans have got to bring 50-50 debt. So, our capital exposure somewhere around 20 million US dollars in terms of investing in the starter plant. The payback of the capital costs, less than 2 years. So, that ticks a box.
Mm-hmm.
We had pre-tax cash flow over a 10-year life of plant. It'd obviously be much more. And using conservative assumptions, that was 50 million US for your net cash flow for the project. So, your 66 million capex and then 50 annual cash flow with conservative assumptions, and we're actually beating those recoveries now.
Right.
It is a robust, and you're not having to take the risk of a mine, geological risk, how good the miners are, how much they dilute it, how does this stuff process in the plant. Everything that goes wrong with mining is gone. You actually know what's in the batteries. They were high purity battery grade cathodes when they went in the batteries.
Right.
So you're trying to recover a very highly pure product. So in terms of the economics, I mean, we came out with a pre-tax 12% NPV of 220 million. So if you had to scale, if you have to make the plant 10 times bigger, that obviously goes up proportionally, and then the plant will last longer than 10 years. I mean, we'll be processing lithium batteries in 10 years that we're producing now. So I think, obviously you've got to caution, I'm going to put a cautionary statement with scoping studies. We wouldn't be making an investment decision based off that. We have completed a pilot at, a significant cost. Mm-hmm. The guys at SMS, not only will we run a demonstration plant, but they will run a Class 3 engineering cost study. And reminder that these are the engineers that actually have to build it, for a fixed price EPC. They've got to operate it over the long term. So, we expect it'll be engineered like a German process plant. I mean, that's what we want.
Absolutely. Okay, but that's the economics. I'm interested in the scale, because if I'm going to invest in your company, I want to know where it's going.
SMS are investing so that we can build multiple plants. They're in the business of building multiple plants. They've built more than 2,000 processing plants since the year 2000.
And your current MOU leads you to believe that the relationship will continue beyond plant number one. They're not buying the license from you. It's a JV.
Absolutely.
Right. Okay.
Correct. I mean, we're talking to, we've been shredding batteries for car makers, consumer electronics, cell makers. And so we look to deploy a number of these. So the hub and spoke is that you can have the front part of the plant, which involves shredding to make the batteries safe to move around. You take them from actually having some charge to being just a shredded black mess, or a black mass is the technical term for it. Then we can put that in 44-gallon drums. It's a dried product. It's completely inert. we can send that to a central processing facility. So,
okay.
We absolutely the target with SMS. If SMS were only thinking about one small plant, I doubt they'd be there.
Okay. But when do you get to a point where you sort of understand? You've laid out some big numbers for Europe in terms of gigawatt hours, etc., and there's some numbers in the marketplace. But have you got some sense of what it is that you're going to create in terms of coming back to the scale question? Because I want to know: are you thinking 5 of these, 10 of these, 100 of these things? I mean,
well, of the if we have a look at that starter plant, which is 20,000 tons and $66 million US, we would have to build 75 of them, right, to handle the end of life waste from battery productions in Europe in 2030. Right. You'd need to have 75 of these. So obviously you're not going to have 75. If you have to scale them up by a factor of 10, you would need 7.5 200,000 ton plants. Right. So that's where we're looking at getting in early. We invested in this. We've got quite a lot of cash. We've got more than $100 million in cash and investments, no debt. So, we are in the position where once we get the commercial supply contract, we can absolutely make an investment decision without any requirement for equity or debt funding.
Right. And once you've done that and that plant is up and running, presumably, if you do build more, you're going to go and raise debt for that rather than burn into your cash that you've got today.
Well, you're going to have significant cash flow from the original 20,000 ton plant. Exactly. So I would imagine, so 2019's been the pilot at a high level. 2020 is a demonstration plant, the class 3 engineering study. Look to make an FID, subject to getting obviously a commercial supply contract at the end of 20. Build the plant in 21. Now, bearing in mind we already own the front end of the plant. We've got a full scale 2 tons an hour shredding circuit that's currently being turned from North American electrical specs to be EU compliant. It'll then get shipped in the first quarter next year over to Germany via Hamburg down to SMS near Dusseldorf. That'll be set up. That can operate at a 20,000 ton per annum feed rate. So we're going to have a demonstration plant, but when we go into production, we'll only have to build the back part of the plant, the hydromet plant. Right. So 21 in terms of building it and commissioning it, and production in 22. At the end of 22, we will have to then focus on building the plant that'll be most likely 10 times bigger.
Wow.
Now, in the interim, we'll be looking to North America to see if we can deploy a similar hub and spoke on a continental basis there. So we're in discussions with parties there. So, we, in terms of the responsibilities, Neometals will, and given that we've been in lithium for 10 years, we've got good contacts with the lithium supply chain. We will be concentrating on commercial agreements to feed the plant. We'll also be responsible for off-taking and marketing the offtake of the products out the back end of the plant. And the gentlemen at SMS will be, the heavy movers in terms of building the plants, operating the plants, and ensuring that they do what they're supposed to. And the added benefit is that SMS is the largest generator of German import-export financing, which is